our heads in the sand. We've got some folks trickling in. For those that are here on time, thank you, thank you, thank you. On this Thankful Thursday, I want to say thank you. I see you, John. Great to see you, JP. I see you tuning in, Mike. I see Deanna coming in. I want to say welcome and welcome back to day 4 of NSA Carolina's second installation of the week of Speaker Love. I hope everyone had a Valentine's Day. I know that I've been filled up with love from the past 3 programs that we had, and I can't wait to be filled with love and money, which I love from today's program. Now, for a quick intro, I'm Larry Long Jr., CEO, that's Chief Energy Officer of LLJR Enterprises. As President-elect of NSA Carolinas, I am absolutely honored to be serving as your host and esteemed MC. Please don't hesitate to reach out if I or we can ever support you, if we can ever assist. We are here. And by we, I mean your NSA Carolinas board, led by our president, Dr. Kevin Schneider, our VP of Member Experience, Sarah Glova, our VP of Finance and Treasurer, Terry Quimby, VP of Marketing, Peter A. Agiovalitis. I hope I pronounced that right. Our at-large board member, John Edwards, as well as our past president, Mike Mooney. We wouldn't be able to put on this programming without our association administrator. Thank you so much to Christine Strack. Thank you, thank you, thank you. And I also want to give a special shout out to any CSPs, any CPAEs we have in the house. I see one CSP that I recognize. So great to see you, Dr. Amy Clymer. We are honored to have you here. I encourage everyone to please explore NSA Carolinas at www.nsacarolinas.org for our upcoming programming. We've got 2 days left of Speaker Love. Our Speaker Love programming is designed to support you in your business. Number 1, build a better business. Number 2, become a better speaker. Now, without further ado, I am thrilled to welcome today's program. We're going to be talking about unveiling. Ooh, we're going to pull back the cape, unveiling the financial roles, bookkeeper, accountant, and CFO. Carolina Aponte is an award-winning author, entrepreneur, and motivational speaker committed to empowering individuals to achieve their full potential. As a young immigrant from Venezuela, ooh, buenos dias, she earned a bachelor's degree from Nova Southeastern University and founded Taha Holdings. There's a story behind it. You'll have to connect with Carolina to get that story. We got it. It's an accounting firm in North Carolina. Beyond her professional achievements, Carolina is a social justice advocate and a youth mentor. Her book, Pave Your Own Way, inspires readers to pursue their dreams and carve their own paths. Please put your hands together for a warm NSA Carolinas welcome. This week of Speaker Love, we welcome Carolina Aponte. The microphone is on, Carolina.
Well, thank you for that wonderful introduction, and good afternoon to everyone who's attending today. I love it. I love it. Well, yes, we're going to talk about those things that people don't usually want to talk about because they relate to money. But the most important thing is to understand who these people are and when you need them, right? Everybody's probably in a different stage of their business. And I'm going to share my screen real quick so that I can provide some sort of backup. Can you all see my screen? Financial Boost, everybody good? Awesome. Okay, so why is it Financial Boost? Because when you are growing your business, whether you're a solopreneur or you have a team of people, you need to understand who needs to be in your court, who needs to be part of your team, so that you have the most success and that you focus only on the things that make you money. As an accountant, that's always my focus. how can we make sure our clients make money? So a little bit of me, besides what Larry just shared, is yes, I'm an author, I'm an accountant, I'm a business owner myself. So the things that I share with you is not just as an accountant, it's out of experience, out of failures in my many endeavors and lessons learned. I'm a public speaker, just like you guys are, but I don't do it as professionally as you guys do because it's always related to what I do as an accountant. And I'm a world traveler. I love traveling, and I have a goal to go to all 50 states and to visit as many countries as I can possibly visit. That picture is from Greece. Anyways, the main thing that we're going to talk about today is what are the roles and what do they do? What are they supposed to be doing, right? We're talking about the bookkeeper. In most businesses, the bookkeeper is you, unfortunately, because you may not necessarily have been trained in the accounting jargon. And so you end up duplicating entries on your books, which means you may be over reporting your income or your expenses, whichever way it goes. And then that can get complicated if you get into an audit. So the bookkeeper's role is to record and maintain the data. The bookkeeper is not necessarily an accountant. The bookkeeper is not necessarily the person who's going to give you insights on tax savings or strategies or how your chart of accounts should look like. That is not the role of the bookkeeper. The bookkeeper is there to record and reconcile. Everything that goes through your bank account and your credit cards needs to be on your books, whatever system you use. And the bookkeeper's role is to make sure that every line item is accounted for. That's it. Nothing else, nothing more. The accountant. And we're going to get into a little bit in depth of each of these roles, but I'm just giving you an overview. The accountant is the one that goes to school, gets a degree, understands what a chart of accounts is, interprets the data that the bookkeeper enters, and is able to, if they choose to, prepare taxes, because not every accountant prepares taxes. So that's the main core of an accountant. And not every accountant has to be a CPA. A CPA is just simply a designation for certified public accountant. They take a state board license and they have to adhere to the state's regulations. So not every accountant is a CPA, but every CPA is an accountant. And then the last one and most important one, when you want to grow your business, is the CFO. That's the Chief Financial Officer of the organization that helps the business create a strategy, whether it's for growth, whether it's to create an exit plan, or to correct the operational aspects of your business.
Office off.
Okay. Oh, somebody, oh, there we go. So that's the CFO, right? Now, let's go over the key responsibilities of the bookkeeper, because if you are the bookkeeper of your business, these are the things that you should be doing. I think, if anybody, show of hands, how many of you are your own bookkeepers? All right. Not great, guys. Not great. So your main responsibilities are to maintain those records, not once a year, every month, right? Every month, record every transaction that goes through your bank, in and out, every transaction that goes through your credit cards, any loans, any fixed assets, anything that you purchase for your business, that has to be recorded monthly and reconciled. The other thing that the bookkeeper does is if you have payroll, and let's say, you know, you're not just an LLC, but you're an S corporation and you also are an employee of your own business, the bookkeeper should be running the payroll and making sure that the tax payments are being made and that the tax filings are being made. That's another role. And last but not least is to generate the basic financial reports, not because the bookkeeper is supposed to know exactly what's going on with those financial reports, but for you to ask questions. The financial reports that a bookkeeper gives you is for you to say, I don't think I made $50,000 this month. How come my income is so high? Or did we really spend $10,000 in advertising? And then the bookkeeper is supposed to give you the details and say, well, $10,000, actually $5,000 was for a consultant that has nothing to do with marketing. So it's been misclassified. So your role as the business owner is to ask questions of the bookkeeper's job so that things are in the right buckets. Okay? So those are the main responsibilities, right? So the bookkeeper is not necessarily an accountant, but it can be. And if you have a bookkeeper who's an accountant, you're golden, because that means they actually understand the implications of recording transactions in different areas, right? So if the bookkeeper is not an actual accountant, they may not understand that you just bought let's say a computer and it's $3,000. It's not an expense, it's an asset, because the computer is going to be with you for probably 2, 3, 5 years, and it can be depreciated, but it adds value to your business. An expense never adds value to a business. Okay? Any questions so far? We're good? Uh-oh.
Good to go. Good to go.
Good to go. Okay, awesome. All right, so then let's move on to the accountant and the key responsibilities of an accountant. And again, the accountant can be just simply an accountant who went to school and understands all aspects of accounting and the rules. Or it can be somebody who took the state board license and became a certified public accountant. Okay? What does the accountant actually do? Well, there's different roles within that particular profession, right? Financial analysis, understanding those financial statements, understanding income, cost of goods, operational expenses, net income, taxes. That's the part that the accountant understands and should be able to provide feedback to you when you hire an accountant. They also understand the balance sheet, which is the most important report of a business, because it shows what the value of the business really is. How much do you have in assets, liquidity? What is your capital? If you always taking all the earnings out of the company, you don't own anything. You've already used it. So the accountant would be able to explain that to you in detail so that you become more strategic on how you use the money of your business to show your business is healthy, in case that you want to perhaps bring in investors, or you want to get a loan, or you want to sell your business. What are you going to be selling? Is there any value in the business? So that's the role of the accountant when it comes to financial analysis. The other aspect is budgeting and forecasting. And this is huge, right? We want to be able to forecast the future so that you can make strategic decisions on whether you're going to hire people, whether you're going to offer new types of speaking engagements or training or consulting. The forecasting allows us to see the model of how much more money could I potentially earn in the next fiscal year. And then the budgeting, I know, is the one thing that nobody likes. Nobody likes to budget. Everybody wants to just spend the money as it comes in. But the budget allows you to be fiscally responsible. Set money aside for taxes, set money aside to pay debt, set money aside for owner's pay. So budgeting allows you to do all of those things, and that's what the accountant is able to help you with. And then we have auditing. Unfortunately, some agencies do audit small businesses, right? And you may have the state agency auditing, or you may have the federal government auditing. One of those two things can happen. It's kind of like the lotto, right? It's not always going to happen, but what if it happens? You need to have all your documentations, all your receipts, all your information in a way that can be explained, so that whatever you report on your taxes has the backup, and you can say, well, yes, I did earn this much, or no, I did not earn that much, if they're claiming that you earn more than you actually did, or you spend money on things that were not acceptable for your type of business. And then that can be deducted from your taxes, so that now you have to pay taxes on that money, right? So the accountants will audit books, will audit the business processes for accounting to make sure that you minimize your risk. And then the last thing that an accountant can do is the tax planning, which is depending on your structure, depending on, how you're set up in your business, how can they help you save money so that the money doesn't all go to Uncle Sam, that some of it you get to keep, and some of it then you get to spend it on the things that actually matter to you and that can make a difference in your family, your community, or your charitable organizations, whatever your heart desires. So that's another aspect that the accountant can help you with. Now, not all accountants are tax accountants. And that's an important distinction. Because when you think that, well, I hire my accountant never told me that if I did X, I would have saved $8,000. Well, maybe because that's not their level of expertise. Maybe they're only focusing on budgeting, forecasting, and financial analysis, and they're not really focusing on the tax aspect of the business. So you have to be able to have that conversation with who you're hiring to see what is it that they're going to be doing for you and what's their level of expertise. The other, so tax planning is big. A lot of the CPA firms, that's what they typically specialize in, is tax planning. They don't specialize in bookkeeping. They don't specialize in financial analysis for the operation of the business. So that's another mistake of thinking that your tax planner is going to give you insights on how to operate your business. They don't know. And most CPA firms hire a lot of accountants, but those accountants that are CPAs that have never run a business, they've never managed a business. They only know the rules. So they can provide the feedback of, hey, since you're in the speaking, world, here are some insights about speakers that you should know, because these are deductibles that you can take advantage of, or you may want to consider doing X because this is in your industry. And these are the trends within the industry. Not every accountant, CPA who does taxes is going to be able to provide you with that information because they don't have the exposure. They don't know. what they don't know. Okay. And then we're going to talk about the CFO. This is my favorite role. It's what I love to do. I am all those three things, by the way, because I started as a bookkeeper. I went to school to become an accountant, and I now own my firm and provide CFO services. Okay. And the chief financial officer's role is to develop the financial strategy for short and long-term goals. Is the client comes in and says, hey, I want to grow my business to $1 million. Okay. The role of the CFO is to look, well, how have you performed before? Let's take a look at the trends and how did you do it? And how are we going to make the gap between what you've done now to get to the $1 million? Let's build a strategy so that we know if it's doable or not. Are we being realistic or are we being too optimistic? That's the role of the CFO, to bring reality and vision for the business owner to achieve goals. Okay, so it's supposed to collaborate with anybody the company or the business has in terms of leadership. If you have a COO or a CMO, the CFO is supposed to collaborate with all of those individuals in your organization to make sure that the overall financial strategy is going to be achieved. And then monitor what's going on in the industry. How can your business benefit from the changes or the upcoming economic challenges? How can we position your company in a way that protects you as a shareholder? And also give you insights on the things that you as a business owner, the CEO, is doing that is not helping the business. Because sometimes we are our own worst enemy, right? And so the role of the CFO is to say, hey, by the way, you know, you should not be doing X, because at this stage, you should be delegating that because you're not really good at it also. Somebody else is. And so that very blunt and frank conversations have to happen, because is to protect your financial results for the organization. So that's the role of the CFO. It's really a very intimate role with the owner or shareholders, because the CFO is supposed to know all of the things that are happening and help in the decision making strategically with the CEO or the leadership team. I put this in here just real quick, and I'll gloss over it, is that if you're doing your bookkeeping on a spreadsheet, stop. Don't do that. A spreadsheet is not your friend. A spreadsheet is prone to errors and nobody else is going to know what happened. So you have to use an accounting system. You should use an accounting system, because if you have a registered business that files taxes, you are exposed to an audit. And guess what? An auditor is not going to appreciate you coming up with 20,000 spreadsheets because you kept the sales over here, and then you kept the expenses over there, and then you kept this other information over there. And they're like, what? I can't make heads or tails. How do I know that this is real? So an accounting system will protect you in the end, because you'll have everything in one system. There are many systems out there. We use obviously QuickBooks, but there's many systems that are even free. You're welcome to explore them, but just use a system and get rid of the spreadsheets. They're not your friends. They used to be, but now we have, you know, technology has advanced, and there's tons of applications that you can use. And so stay away from the spreadsheets. So here's the gist. and why you need to hire a bookkeeper. Because if you're not familiar with these 5 terms I have here on the screen, and you don't do them on a regular basis, you need to hire a bookkeeper. Here's when you hire a bookkeeper, right? You should know what the chart of accounts is and how it's organized. You should understand debits and credits, because that is how accounting is done. For every debit, there's got to be a credit, and vice versa. You have to know what a general ledger is, because that's where every single transaction lands in accounting. You have to reconcile. It is not simply, it's not good enough for you to look at your bank account and say, oh yeah, I have $10,000, I'm good. No, you have to reconcile on a monthly basis. There's a lot of fraud that's committed because people don't check their accounts. And by the time you notice, it may be too late to recover. So you want to reconcile. And the other reason for that is, when you do reconciliations, you'll notice and you'll quickly figure out that you're spending money in things that you shouldn't be spending. So the process of doing it on a regular basis kind of helps you open your eyes as to where your money is. So if you're ever at any point in your business struggling financially, cash flow, you're like, I don't understand. I'm selling, I'm getting all these clients, I'm going on the road speaking, but I can't seem to catch up financially. That's because you're not looking at the details of where your money is and when the money comes in and when the money goes out. Timing matters. So that's the bookkeeping process. If you know payroll is coming up on the 15th, just today people got paid, some people, then you have to know that if you haven't collected the fees from your events, and if they're not in your bank account, you may have a cash flow situation in your hands because the money's not coming in at the same time that the money's going out. That's why bookkeeping is critical, and you should hire a bookkeeper for that, or a bookkeeping firm, or if a family member is trained on bookkeeping, not just because the wife or the husband or the spouse or the partner, but because they actually know what bookkeeping is. Because I also see that a lot. Oh, my cousin helps me. Yeah, but what's your cousin's background? I want to know. How do they know what they're doing? Because if this is the key to all of the results in your business, not only for financial forecasting and understanding your net income, but also for tax planning and for strategy, right? Because the financial data is sort of divided into 2 groups, right? The operations of your business, which is income comes in from your sales, the cost of the sales. And I'm going to guess that some of you in here don't keep track of the cost, including yourself. You are a cost to your business. Because if you're not speaking, how are you making money? So understanding the cost, how much does it cost you to speak at an event? What are the travel costs associated with speaking at the event? What are the costs associated with whatever goods you provide? If there's any assessments or any, physical things that you have to give during your presentations, you have to know what the cost is. Because those are not necessarily expenses. They only happen when you're speaking. They only happen when you're doing the event, right? Expenses, which is the cost of operation, are things that either are fixed or they vary. You can get to decide whether you're going to spend the money or not. For example, advertising. You may have a budget of 5% for advertising for the year, and it turns out you don't really need that much advertising because business is booming. So you don't use the money in advertising. You may use it for your net income or for other things you want to do. But then there's other expenses like, I don't know, you may have an office, like I have an office space. You have to pay rent. Well, that's a fixed expense every month. You know you have to come up with that money every month because you have an agreement. You have a lease agreement. So that's an operating expense. The same thing is with utilities, or maybe you have a staff who helps you schedule your virtual assistant. That's an operating expense because they're not a cost of doing the presentation. They're helping you run the organization. So that's operating expense. And that's the report, the profit and loss or P&L or income statement, because it's got different names, mean the same thing. That's the report that shows the health of your sales and your expenses. How much revenue you generated in a given period, and how much, what did it cost you to generate those sales, and then what did you get to keep your profits? How much profits did you pocket it for the month or the year? And then that same report for the year is the one that's used for tax purposes. So sometimes people will say, oh, but I don't want to pay taxes. Okay, but if you're showing profits of $200,000, I don't know what to tell you. You're going to have to pay taxes, because how are you going to avoid if you're having those kinds of net income, right? So you have to understand what that report means to make decisions. That's when you hire an accountant to help you understand, what does this financial statement mean to me and how is it going to impact my decisions? And then the next part is the balance sheet, which is assets, liabilities, and equity. What are the assets? Well, your bank accounts, your savings accounts, your accounts receivable. Because if you do contract where you're securing a speaking engagement today, but it's going to happen 3 months from now, and you're invoicing, you're going to get paid, then that's your accounts receivable. That's an asset, right? Those are the things that can be sold, to another company, and then you have cash, liquidity. That's what assets are. Or you may have equipment. You may have perhaps a website name can be an asset, because that name that you secure, that you own the domain, somebody may want it really bad and pay you for it. So that might be an asset. And then you have the liabilities, which is the stuff that you owe others, whether it's a credit card, a loan, an SBA loan, payroll taxes, sales taxes. Those are the liabilities, right? And you have short-term and long-term. Short-term credit cards, long-terms line of credit, maybe you purchase a vehicle for the company. So those are long-term loans. And the assets minus the liabilities is the equity, which is what you really own as the business owner. That's the one that's hard, that most people don't know what they own. They don't know what the equity is. Because if you don't have an accounting system, the spreadsheet is not going to show you. So you have to have an accounting system to be able to track that and know, what's the value of my business? What do I really own? What's my capital? Right? So that's the breakdown, the simplistic, kind of like overview of what an accountant knows and does for you. And when you hire them to allow you to understand how your business operates and what you should be claiming on your reports, and what's allowed, what's acceptable according to the IRS, and what is not. This is what the P&L looks like. Revenue minus cost of goods sold minus expenses, you get your net income. And you should be running this on a monthly basis at a minimum to know how are you doing? How is your business? Is it healthy? Do you need help? Do you need to change strategy? And this is the balance sheet. Is your assets minus your liabilities, and then you have total owner's equity. That's what you own. In this case, 31,000. So now I'm going to open up the floor if anybody has questions.
Ooh. Carolina, first I want to say thank you for sharing all this great information. I'm going to keep it real. My head is spinning. So I talk for a living. Numbers, there's a reason why I can't even spell math, accountant, CFO. I struggle to spell those words. As a solopreneur, I mean, I've got 3 employees. It's me, myself, and I.
Mm-hmm.
I'm the bookkeeper, the accountant. I'm a little bit of everything. Where do
Mm-hmm.
I start?
You start with a consultation. You start by asking yourself this one question.
Yeah.
Should I be doing this myself? Should
Gotcha.
I be doing this? Am I doing myself a favor by doing this myself? Is it necessary for me to spend time doing this? Or is it time for me to delegate? Because now I'm at the point in my business where my time, the value of my time, is greater than having to spend a Sunday doing the bookkeeping that I don't like because I have the misconception that because I'm a solopreneur and because I don't have 20,000 transactions, I should be doing this on my own.
Yeah, what
And the
what really
other,
got me was when you said every month, because I'm
yeah,
going to be honest with you, I reconcile all my paperwork once a year, and generally it's twice a year. It's once a year when I try to do tax season, then I file for an extension, and then I'm scrambling once the last extension comes, just trying to get papers and receipts and all
right,
my stuff together. And
right.
Excel is my friend and not my friend altogether.
Exactly, exactly. So here's the thing. People often think, especially solopreneurs, because that's how, I started as a solopreneur with the advantage of being an accountant. So, so I kind of knew how to do my own bookkeeping, right? But most solopreneurs start their business with nothing, right? You start with nothing. You start with hope, right? And so there's money that doesn't pay the bills, right?
Yeah.
Hope doesn't pay the bills. So you start doing all of the roles in your business. But at some point, you have to stop yourself and ask yourself, is it time for me to delegate this function that I'm not really good at? And it's not worth my time because I can be making more money if I don't have to spend time doing this one thing. And also, I'm not good at it. Not only that, it's because it's not expensive. Doing the bookkeeping is not an expensive activity. Okay. But if you have somebody doing it on a regular basis, it releases all the stress and it allows you to plan ahead, because what you're telling me is you're waiting until April 1st to start putting together your stuff and then be overwhelmed. And then you're like, you know what? I'm just filing an extension. And then you forget about taxes. And then you go all the way to October. And they're like, oh, crap. I filed an extension and now I got to put together all my stuff to file taxes. You didn't plan. You didn't do anything to save money on taxes. You could have potentially saved thousands of dollars had you employ somebody and had a system to help you see what the numbers really look like on a monthly basis.
I feel
And
targeted. I wait until April 13th, and then I say extension, and then October the 7th, ish, I say, uh-oh, Houston, we got a big problem.
well,
I got 10 minutes.
I may know a few people like you.
I'm happy to hear I'm not alone. I've got more questions, but I see Mary Elizabeth said, great questions to ask ourselves, Carolina. Can you recommend other programs besides QuickBooks for those who are just starting out to
Sure.
move from the spreadsheet model method?
Sure. There's a few programs. There's one is FreshBooks. It's mainly for invoicing, but at least it does give you some structure and it's free. There's another one called Wave. That one is free, and it does have balance sheet and income statement functionality. So that's a good way to start. What I'm always going to recommend is this. Even if you're going to be doing that on your own, have an accountant set it up for you. At least pay for that. And here's why. Because if you do what the software tells you to do, you're going to end up making mistakes because you're not an accountant. But if you have the bookkeeping, even if it's the free version set up for you, then at least you have more chances of succeeding in doing it on your own.
There was a question that came in. I'm curious, and this came from Dr. Amy Clymer. I'm curious if you have used Xero. Xero.
Yes.
Yeah, Xero. It's like QuickBooks.
Yeah.
I just was curious if you'd used it, Carolina.
Yeah. We have had clients who use it. I'm not a fan.
Okay.
I'm not a fan, but listen, I'm not here to sell a software. I'm here to tell you, you got to have a system. And if that's the one that works for you and you like it, go for it. Right?
I'm just curious. I do actually have a different question.
Mhm.
So I've had my speaking business for 15 years. I use QuickBooks Online. I'm very comfortable with bookkeeping and so forth. So I'm curious, you made a comment that made me wonder, I think I'm pretty good about, like deducting things that should be deducted, travel expenses related to business and things like that. Are there any things that are deductible that are fairly unique to speakers that maybe we wouldn't have thought about that you can think of?
Well, yeah. The clothing that you have to wear for your presentations.
Okay.
That is one, because it's part of your image, right? It's part of the being able to be on stage. Anything that is related to preparing for the presentation should be deductible, because otherwise you would not be able to get on stage.
Like, what do you mean? Like, what's an example of something?
So an example is if you have to have some video or content development, any content development, any slides or things that you pay somebody to put together for you, or if you have to buy some equipment, let's say microphones. I know that our friend here had like 5 microphones when he got on Zoom with me. Those are, props. Anything that's a prop, it's a deductible, right? So the way I would advise you to look at it is, when I'm going to go on stage, what are the things that I need that I cannot do without in order to do this job?
Okay, let me ask about,
Mhm.
I'm curious. Larry, you're so funny.
6. I just wanted to clarify for the record. We can reconcile. It's 6.
Okay, Caroline, I'm curious about the clothing, because I've had a conversation with a couple different accountants and I've gotten different information. One said that, so like if you're wearing something that has, like the logo of your business, obviously that is a business expense that makes a lot of sense. But if you're wearing like, like I wear a lot of, blazers, like say that blazer like Larry's wearing, and, he buys it to wear to work, but he might wear it in some other context too, because it doesn't have a a logo on it. It's just a nice
Right.
blazer.
Right.
Is that considered a business expense, or is that kind of a gray area, or what's your take on that?
It depends.
Okay.
Let's just say that it depends, and it's going to depend on other factors, but without understanding how you do your business, what you do in your business, it's really hard to give that kind of advice. So I don't want to give a blanketed advice as to everybody should do X, right? Because each one of you, even though you are speakers, you each have a unique business and a unique way of providing the service. So it is always advisable to look at where are you in your business, what have you done in the past, and what opportunities you've missed, so that you can then move forward and start making those changes.
Great. Okay, thank you.
I hope I answered the question.
Yeah.
And Carolina, I appreciate you showing the levels, the bookkeeper, the accountant, the certified public accountant, and then the CFO. It seems like it gets more in depth, more strategic versus the transactional at the bookkeeping level. At what level, and I see there's a couple other questions coming through, at what level should folks as speakers consider a CFO? Is there a certain revenue kind of that
No, and that's also a misconception. You don't have to be a multi-million-dollar business to hire a CFO. And the beauty of hiring a fractional CFO is that it's a fraction of the time, right? It's a fraction of a time, but that you get the advantage that the larger corporations already have because they employ full-time CFOs. So you want to take advantage, especially if you have the desire to change the trajectory of your business, right? If you want to change the trajectory of your business in terms of whether it's growing the revenue or growing the profits, because they're not the same, okay? If you want to change the trajectory of where that's been, you want to hire a fractional CFO to help you see how can you make it happen? How is it possible? I meet with a lot of people who say, prospects and say, well, I want to make $1 million. Okay, well, let's start from the beginning. How did you start the business? How much have you sold in the course of the business? How have you acquired your clients? And what kind of leads do you generate so that we can do the math and see, is it possible to make that number? Because that's what the CFO is going to do, is kind of see what the historical data and your goals and your vision, does it make sense? Or are you just way too optimistic and it's just not going to happen? Or it's going to happen, but it's not going to happen in the period of time that you want it to happen. It may take a little longer to get there, but here's how. Here's how you can get there. And it's looking at pricing. A lot of you, I know for a fact, pricing is what keeps you at a certain level of revenue, because you feel afraid to ask for more, because you undervalue what you offer, what you have to offer. And so it's because if I increase my price, the clients are not going to come in. I'm going to call it BS. It is all about strategy, and it's how you present it that is going to make the difference, and that's going to give you the money. So that's part of the CFO role, is to figure out, is your pricing right? What about your cost? Why are you not charging for X? Those things are part of the role of a strategic planner, and that's the CFO. And the other component of it is that a CFO should have management level experience, not just being an accountant. They should have been on the trenches. They should know what it takes to run a business, so that they have the knowledge and the wisdom to guide you in the decision making. So a fresh, an accountant fresh out of college that's only been in business for 5 years, I'm here to tell you, they're not going to have the level of experience to know all of the things that can potentially happen when you make those decisions.
Wow. You're a mind reader. Ooh, talking about that pricing. Ooh, wee.
I know.
I feel targeted, and it hurts so good. Oh, Karen.
It is for your industry is the #1 problem.
Oh, so true. Let me open it up. Are there any questions before we wrap? I don't know about y'all, but I've been enlightened. This is certainly good. And I think that I need to have a consultation to learn more for just my business. But any other questions from the audience? Any thoughts, feedback, comments, questions, concerns, you name it.
Okay, I have another question. It's also kind of specific, Carolina. Okay, when you were talking about cost of goods sold, the way you report, because I mean, okay, just bear with me for a second. So technically, on one level, a cost of goods sold is an expense, right? You're putting money out.
Sure.
The way you report it in the software in QuickBooks as either an expense or a cost of goods sold is the primary reason to do that because of the way it'll show up on your reports, and then you kind of have a different view of the business. That makes sense to me. Is there also a tax advantage to listing something as a cost of goods sold versus an expense?
Yes.
Talk about,
and the answer is yes.
Okay, can you say a little more about that?
Yes, there is an advantage, but the primary reason you want to know what the cost is you want to know what your margin.
Sure.
You want to know the margin. Are your costs 40%, 50%, 60%? And if so, whoa, let's have a conversation. Because it shouldn't be especially because of your industry, but there are other industries that yes, the costs are going to be super high. And the other component of it is what if what you want to do with your business is bring other people to do what you do at a different scale so that you're not the one doing all the talking. You're not the one doing all the training, consulting, whatever it is that you do. So you want to know what the cost is so that you can plan and decide when do you pull the trigger to hire and bring in somebody else into your business.
And then what's the tax advantage to listing something as a cost of goods sold versus a regular?
Because some things are not 100% deductible, but if they are directly a cost of doing business, it is 100% deductible.
Oh, like maybe a meal or something.
I'm not here to advise on any tax matters.
Okay, sorry. I pushed you too much. I didn't realize. Okay, thank you. That's very helpful. I appreciate it.
Absolutely. Listen, guys, you guys can connect with me on LinkedIn, and if I didn't answer your questions now, please email me, reach out. I'll be happy to provide some information. And if you want, have a consultation, I always book 15 minutes free, and we can chat and see if there's an opportunity for us to help you become a more successful speaker.
Oh, I love the sounds of that. If we can give a warm NSA Carolina's Week of Speaker Love round of applause to Carolina. That was absolutely amazing. Thank you for taking the time to share with us, for absolutely giving us all the great insights and information on day 4 of our Week of Speaker Love program. And thank you, Carolina. I invite each and every one of y'all to join us tomorrow for our final day. We've got Bernadette McClellan coming in all the way from Australia, currently lives in Colorado, going to share her program on story selling, not storytelling, but story selling. You don't want to miss it. We'll see you on Friday, 12 o'clock noon Eastern. Thank you again for joining us. All the best. Take care, y'all.
Thank you.
Thank you, Carolina. All the best. We'll be in touch.
All right, sounds good. Thank you.
Bye now. Thank you, Christine.